Yeah, so we've revised up our projections for the US economy, reflecting stronger data that we've seen. You know, the US economy is proving more resilient than people expected and has not seen as greater impact from monetary tightening as some people would have expected. So we have revised up our projections for the US economy. You know, this is a good thing. The US economy is growing, lots of people in the labour market, and obviously that has important spillovers for the rest of the global economy. There are, of course, risks. As I say, our central projection is for a soft landing, but there are risks around that, and it is harder at this point in the cycle to make those judgments about policy, and that's why policymakers need to remain vigilant as the data emerges.
Looking at China, you see 5.2, so a little bit higher for this year, 5.2%. But what's interesting in China is you see the growth slowing down quite dramatically for the next 2 years as well. While everywhere else in the world we see like 25 could see a pickup, but it's not the case for China. So again, can you explain to us?
Sure. I mean, what we're seeing in China is lower growth in the medium term is the expectation. We're no longer going to see those very high levels of growth that we've seen in China pre-pandemic. I mean, the Chinese economy is still recovering from the pandemic. It was a very big hit to the Chinese economy, and the zero COVID policy meant that the restrictions were in place for longer. So we have seen a return, we have seen a bounce back in the Chinese economy, less than some people expected. But medium term, there's a lot of structural challenges the Chinese economy faces, whether that's the real estate sector, local authority debt and government borrowing, or it's the aging population. And those things mean that Chinese growth in the medium term will be slower than the sorts of rates we've become used to.
Looking at the Eurozone, of course, a lower growth I would see in other parts of the world, 0.6% for this year, so unchanged. You downgraded a little bit for next year, actually, at 0.9%. You say we don't see the full impact of higher interest rates is still uncertain. That could still have a way on the growth going forward. So again, paint a picture for us of what you see in the Eurozone.
Yeah, we have revised down our outlook for the Eurozone, slightly weaker outlook there, reflecting less strength in the economy. The economy has obviously had it's faced a much bigger impact from the energy price spike as an energy importer, so still very high inflation. And of course now the impact of monetary tightening is feeding through. So we're expecting a bit less activity in the Eurozone, but again, a soft landing and a smooth landing. We're not predicting recession anywhere we're not predicting in any major economy.